you doing today? It's Uncle Bruce here, Stock Markets with Bruce. Welcome to my show. It's Thursday, September the 16th, and it is 8:30 a.m. in the morning Eastern Time. And whatever reason this morning, my computer and YouTube and StreamYard can't seem to understand that this is 8:30 Eastern Time. And so some of you are getting the impression that I'm not coming on for another hour. When I start at 8:30 every day, I try to edit this thing with StreamYard, and one division isn't talking to the other, so I just went live. Here I am. Well, welcome all. We're all fine. It's all good. We're live and looking forward to an interesting day. And speaking of interesting, those of you who are members of this channel, you received an alert this morning. About an hour ago, I think I got it out, maybe 45 minutes ago, an alert talking about Spire Global, SPIR. This is one of the SPACs that we've been following now since February. Spire Global right now is up $2.91 in the pre-market, is trading at $12.67 a share. On the pre-market, up 29.8%. When I made the alert to sponsor members, channel members of this channel, when I alerted you guys, we were at 1180. We were up 20% at the time, and I made the alert. Now we're up 29.8% at 12.67 a share, up 291. And I have no news that I can tell you about. Nothing official. I have nothing in writing anywhere. All I can find is info on the acquisition that the company announced the other day, where they were going to take over Exact Earth, a company trading in Canada, a Canadian-based company in the same business that Spire is in, managing satellites. And it's a great sounding deal. I like the deal, the way it was structured. It's a cash/stock deal where Spire will buy the shares of Exact Earth in a cash/stock arrangement. It's something like $3 Canadian a share plus 1/10 of a Spire share for every share of Exact Earth. At the end of the deal, when it's all said and done, the shareholders of Exact Earth will own 3.8% of Spire, the whole merged company. So it's 99% cash. So it doesn't dilute Spire at all. As far as shareholder dilution goes, Spire has the cash to make this deal, and they have access to billions if they want it. Fantastic. I love this deal. It brings in a secondary company into Spire with its own set of clientele. It adds 75 new clients to Spire's growing list of clientele, truly going global. This is a really great arrangement. I wrote a few covered calls on Spire last week for expiration this Friday at 12:50. What is your advice on what I should do? Still a chance it dies. Out of the money. Baking. This is what happens when you write covered calls on stocks that I tell you don't write covered calls on. I don't know how many times I've been asked, should I wait until the stock's at least $20 before I write covered calls? And I say, yes, do not write covered calls on SPACs before they hit $20, because once they move, the move could be so violent that it'll take you out. And sure enough, here we are at 12.30 a share on Spire, and we have a viewer with the 12.50 call. The good news, baking is all is not lost. You're going to be just fine. I would not be surprised if the shares have this rally right now, but between now and tomorrow, be Friday, that the shares may stay under 12.50 and these contracts will die worthless anyway. That's step one. Step two, you can buy them back anytime you want, obviously, to get out of the commitment to offer up your stock. And between now and tomorrow at this time, and then tomorrow morning and tomorrow afternoon, the value of the contract you've written will shrink dramatically to be either a book value only scenario if the shares are higher than 1250, or they will be very cheap coming into the last hour of trading. So you'll be able to buy them back and be done with it. In theory, though, let's just pretend the stock just keeps on going. What if the stock goes to $15 today? I don't know. Could. Don't think it will, but let's say it did. What goes to $15? Well, you'll do a rollover. You'll buy back these calls between now and tomorrow's close, and you'll write new calls for either the next Friday or the Friday after, the Friday after that. And you might be writing 1250s. You might write 15s. And theoretically, depending, you might be able to, let's say you write 1250s for 3 weeks from now. They're in the money, but they'll trade at a premium. They'll trade at the book value plus a premium, whereas you're going to buy them back at a book value tomorrow. So if you pay $250 to buy them back or $275 to buy them back, but you can rewrite new ones for $4, then you're going to bring in additional cash, raise the time limit, but keep it at $12.50. That's one solution. Another one is you could write maybe contracts that are a month or 2 or 3 further ahead at, say, 15. So you're raising the exercise price, bringing in as much money, if not more money, because you're offering a lot more time on a new set of contracts. So all is not lost baking. Just kind of stick around. Although I will tell you right now, Spire is $13 a share in the pre-market, which puts your contracts in the money, 63 cents. That's okay. Again, it doesn't matter. It's an okay thing. Even in theory, if you were notified right now that you were exercised, you would have $12.50 a share in your account for every share you wrote options up, plus the premium you already got, and I don't know what that was. That cash is going to be sitting in your account immediately. And you can now fold your arms and go, okay, well, I want to buy my Spire back and rewrite, but you may want to wait a day or two and kind of let this hype calm down, because this is a dramatic move. And I don't know what's causing it. And I don't know if it's real. I don't know if it's a short squeeze. I don't know if it's I honestly don't know what it is. If I knew, I'd be telling you. But at the moment, I don't know what's causing it. Up $3.25 a share at 13.01 at the moment. This thing is changing by the second here. So calm. You're going to be all right. You're richer no matter what. No matter what, you're richer. And anyone else with Spire, you're doing well today, and I'm thrilled about it. I have been collecting nice cash by moving my GameStop covered call lately, but I am now caught in a $200 US dollar strike price expiring Jan 22. Should I roll over to April if it gets to the 220.30, or just do it now? I would wait. Yeah, I would wait. Let the stock go higher before you do a rollover, because if the shares go up to 220, let's say, in a week, which can happen if it did happen, go to 220 next week, then you can look at writing April's, but you might look at writing April 250s or 240s instead of 220s or 230s. You may find that buying back your 200s might run you, what are they expiring at? Did you say Jan? They might cost you $30 to buy back $20 book value calls. But you can now write $40 valued calls by writing April 240s. And so you're moving up $40 in exercise price, and you're bringing in more cash for your next rollover. So be patient. Yeah, let the stock, make the stock, let it run and make you do that rollover at that time. Yeah, let's see how it goes. What do you think is the 3, 6, and 12-month future for ATIP? Hard to keep track of how it relates to Spire and the market as a whole thing. Again, I'm a bull on it. At these prices, how can I not be a bull? I liked it at 10. I adore it at 360 something. I don't like it here. I'm not happy that it's here, but it's here. And it's a steal, a steal, a steal. If you can pick off the 250 call contracts that go into next year, those could be the buy of the year. Those could be your home run. $5 calls could also be a good move for further out. If you can get them for less than a dollar, around 50, 60 cents, you can pick off $5 call contracts. That might be a bargain as well. But those 250s are definitely where I'd be looking at, apart from just buying the stock itself, just buying up the stock. Anyway, there you have it. Is there a law of diminishing returns point on Matterport? 1750 calls expire January. Is there a price I should roll over? I paid 267. Well, I mean, right now you're at what is it? A 250. You're already at, what are you at here? 325 in the money, and you got a premium on them, I'm sure. I would just stay with them. We're up $1 now on Matterport, 2076. I would just hold on and not move them at all, not sell them right now. Right now, you want to gain this book value move, because if Matterport goes up another $1 from here, you're another $1 in the money. You lose very little premium, and this is maybe 80, 85 cents of the dollar is yours. If these shares want to go to 23.25, let it happen. Let these contracts go into $7, $8, $9 for you, and then decide what to do. Yeah, right now you're at the cusp of a real nice move here that is really going to pay you well for it, and you might as well stick around and enjoy it. Folks, check out stockmarkersbruce.ca, catch a lesson 2 or 3 or 4 or 10, and become a little smarter than others. You only need to be smarter than half of the market players.